obviously, since the beginning of March, JL, it seems, obviously the world has intervened and the markets have been crazy and a lot of people are fearful. They don't know if they should be changing things. They don't know what they frankly don't know. They're fearful and they would look to you to just hear what's on your mind. Like since February, since March, how have you been thinking through this? Has anything changed? Have you made any moves? Have you made any adjustments? Just talk us through what your mindset has been like for the last 3.5, 4 months.
Well, I've made a couple minor moves that the market created opportunities for that we can get into, but they're minor in that it's nothing that changes the basic philosophy. So right now, well, of course, now the market's bounced back pretty strongly, but for a time there, we were in the process of a market crash, and that's a normal thing. I mean, market crashes happen on a fairly regular basis. Fortunately, not very often, but we get 10% corrections on a regular basis. We get 20% bear markets on a little less, but still regular basis. And every now and again, like we did a couple months ago now, we get a crash. That is a normal part of the stock market. Now, the only thing that was not normal is what triggers the crash. And every time it's something different. I kind of knew something was coming simply because it had been a long time. I never would have predicted or tried to predict when it was coming, and I certainly wouldn't have tried to predict what would trigger it. I think it's tragic that what's triggering it is costing lives with the COVID virus, but something always comes along, and then the market recovers and goes on to new heights. So from that point of view, from the market point of view, nothing has changed. In the midst of the plunge, I was writing much more frequently than I usually do because of this topic. And there were a lot of comments on my Twitter feed and on my blog posts from people who are saying, well, this time it's different. And of course, that's what everybody says with every market crash is this time it's different. And I sort of tongue in cheek put a tweet up at the time saying I've discovered a new symptom of COVID-19, clairvoyance, because everybody seemed to know what the market was going to do, which of course was to continue to plunge. And as we know now, the market did the very opposite. Some wag once said, the market will always do whatever it takes to embarrass the most people.
I might have to quote you on that one. But yeah, Brad summarized that question right. Like, what were your philosophy? Because everyone's wondering, should we stay in VTSAX? Should we move to something else? And then
my philosophy, Jen, in a nutshell, is nobody can time the market. Nobody can predict when these things are going to stop or when they're going to turn around, when they're going to get better. So the time to invest is when you have money to invest. If you happen to be lucky enough to invest when the market's crashing, then that's a blessing. I mean, I tell especially young people, like, there's nothing more favorable to you than a nice solid market crash that brings prices down. When my daughter puts in money every month, like clockwork, which is what you should do. And she saves 50% of her income, as I recommend. And I noticed in April, I think it was, that set amount of money in April bought 19% more shares of VTSAX than in March. That's a blessing. So instead of being scared by market drops, you should welcome them. You should take advantage of them. You should certainly keep investing during them because the market will always turn around and it'll always go back up. Now, if you happen to be retired and living on your portfolio, then at that point you have bonds in your portfolio, and the bonds are what you use to smooth the ride. But for people like my daughter who are still working and investing, this drop has been a bonus.
Yeah.
I would be curious to ask about reassessing risk tolerance. So for someone who maybe they've been investing for the last 10 years, things have been going swimmingly well, and maybe mid-March into April was the first time that they've experienced that 20-30% drop, and maybe they didn't sell, right? Maybe they listened to you and they didn't panic sell and didn't lock in that scenario. but they're realizing, hey, maybe I'm not cut out for this like I thought I was. What would you say to a person who came to you with that? If how would you, I guess, try to talk to them about long term, but also if they truly did realize something about themselves and they wanted to make moves, how would they even go about that?
Well, that's a great question. So if you're invested in stocks and you find yourself in a sudden plunging market, and it turns out that it is far more uncomfortable for you than you figured it would be, I guess my first piece of advice would be to stay the course till you get through this market cycle. And unless civilization ends, unless the US economy ends, unless publicly traded stocks go away, we will get through this cycle and go on to new highs. But you've learned something important about yourself. And by the way, there's nothing wrong with learning that psychologically you're not comfortable investing in stocks. That's a very important bit of self-knowledge. As the philosophers say, know thyself. There's a guest post on my blog from a couple of years ago written by a guy named Steve, and he doesn't invest in stocks. He invests solely in cash. He doesn't want to deal with volatility of stocks. And I absolutely respect that. And I put his investing approach up on my blog for that reason. You don't have to invest in stocks. I think it's the most powerful thing you can invest in, but it's certainly one of the most volatile. And if that volatility keeps you awake at night, and you can't adjust to it, then it's good that you know yourself, and there's no shame in that. And you probably ought to be looking at something else.
Yeah, and know thyself. It's important. And Allison, Jen popped this across the screen before. She said it's better to dollar cost average than to be paralyzed by fear and not invest at all. And I think no matter what our opinions are, again, knowing yourself is really important. And frankly, JL, dollar cost averaging is something that I do, and I know it's not optimal. I know it's not, but for my wife and I, it's just something that is easier psychologically for us. And I know it's suboptimal. And
for just a couple of moments ago, I said the very thing that if you are psychologically uncomfortable investing the lump sum, understand that you are adapting the math to your psychology, and that's not optimal. But as your commenter, I forget her name,
Allison.
As Allison said, if it's that or not invest at all, then I agree with Allison.
Yep.
And if that's the way you're comfortable investing, Brad, then, and you're certainly, you know the math as well as I do, that's a choice that you make.